best in radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. It's Kerry, Lutz, and hey, lots going on. It looks like gold and silver have bottomed, and well, agricultural commodities, a whole nother story that you need to take a look at. That's why we've got Ned Schmidt on with us now. You know him well from the Value View Gold Report and the Agri-Food Value View. Ned, how are you?
I'm doing great. How about you today, Kerry?
Just fine. And hey, so your take on things, we're a bunch of frogs?
That's what we're going to talk about, how to cook a frog. There's this,
yeah, slowly.
Most of your listeners have probably heard this story, and it's, if you put a frog in a pot of cold water, he or she, I don't know how you tell frogs apart, will swim around happily. And if you set it on a burner and turn the heat up slow enough, the frog will not be aware that the heat's being turned up until it's too late, and all you got then is frog soup. Well, that's what's going on in the markets today. And the Wall Street and all the media I look at just seems to be ignoring that the water is getting warmer, and they're about to be frog soup. I mean, the Federal Reserve has been tightening monetary policy for almost a year. We're getting ready for the 8th tightening of monetary policy, in fact, a week from today. Now, what does that mean? If we go back to last year, when the Fed was pumping $85 billion a month into the U.S. banking system, that did finance the entire U.S. government deficit. They monetized it and put an extra $40 billion a month into the system. The first place that money flew was the bond market. Well, that's over. And it was flowing then into the stock market. Well, now the situation as it will be next week, Federal Reserve is going to essentially be buying zero U.S. government bonds. And the U.S. government has to finance the deficit. I mean, we haven't talked about the U.S. government deficit in 2 years, but every month the Treasury is now going to be withdrawing $50 billion a month from the financial markets. And this has been slowly coming in over the last about 4 or 5 months, where now the Treasury is a net drain on financial markets. There's $50 billion a month now coming out of the financial system to be spent by the federal government. That's what has started to put some wear and tear on the U.S. stock market. The Russell 2000, which is the small stocks, is at a new low. The NASDAQ peaked in August. The S&P and Dow peaked in September. And you can actually see it sometimes on a week-to-week basis. I get a push from somebody that tells you when the Treasury has completed a financing. And the weeks where the Treasury is completing a financing, you see these downdrafts in the U.S. stock market. That's that money being pulled out. Well, if the bond market's over and the stock market's withering, where are people going to go with their money? Well, one of the places they're going to go is going to be the metals, because people like what's up. People will not buy things that are going down if they start to realize that their stock accounts aren't doing anything. What has kept gold compressed, and even silver more brutally, has been this phony dollar rally that's been going on for about the last 4 or 5 months, and finally looks like it's over. That happened for 2 reasons, but the primary one to think about is back when the Federal Reserve was putting this extra liquidity in above what the Treasury needed, of $40 billion a month. The funds were borrow that money, and they take it and buy things. And they bought things all around the world, investments in Europe, in Latin America, in Asia. Well, when that money spigot got turned off, and when it turned into a drain, when we went from the Federal Reserve providing an extra $40 billion a month to the Treasury withdrawing $50 billion a month, they had to repatriate those dollars back. And so what we had was a selling of the European currencies, which were exacerbated by Putin. And it's not a rally because the dollar is better than the rest of the world, because Chinese yuan, for instance, has been appreciating against the dollar. So this phony dollar rally, which has suppressed the metals, is ending. And the other thing that's going on is money is going to flow out of dollars into China starting sometime in the next few weeks. It was supposed to happen on the 29th, but we don't know if it's going to now. The world is going to start two-way trading between Hong Kong and Shanghai. So the first time there'll be near free ability for Westerners to buy Chinese stocks. And just like they jumped on Alibaba, they're going to go into the Chinese stock market. We're going to see billions flow through Hong Kong into the Chinese stock market, which is going to do a couple things. It's going to push up the Chinese stock market. And if your listeners will pull up a chart on their computer on the Shanghai Stock Exchange Index, it's been screaming. It's been the strongest stock market around. Forget tech stocks. Shanghai's been beating it. So it's going to push up Chinese stocks, and it's going to cause the renminbi, the Chinese yuan, to appreciate even more. So the two hot markets for the next couple of years is not Apple, it's Shanghai Stock Exchange and the Chinese yuan. And that's going to happen whether your listeners believe in it or not. I mean, I'm sure there's more than one who said, now they're shaking his head. I'm not putting my money in Hong Kong, China. Well, it doesn't matter. The world is going to. Now, there's a lot of us that won't put all our money in the Chinese market or in the Chinese currency for a lot of reasons. That only leaves one other choice, because the dollar is going to be depreciating. The other choice is gold. So we're going to have really three investments that are going to be interesting for the next couple of years. That's the Chinese stock market, the Chinese yuan, and gold, because you need another currency other than the renminbi. So, with money being sucked out of dollars into China, that can only weaken the dollar, and it's going to weaken the dollar and strengthen gold. And I'll stop there and take a breath, Kerry.
Yeah. So basically, what you're saying, if I just paraphrase it, is that that pretty much the rally that's gone, and pretty much the shift from west to east is really going to pick up steam now. And there's pretty much nothing that anybody can do about it.
Yeah, that's it. What you're saying there is really important. And it's important that even if the listener does not want to, I can see them shaking their head, I'm not putting my money in China. Mm-hmm. Okay, but you can't stop the avalanche. I mean, this is going to happen. We've been waiting for it for 10 years. And it doesn't matter whether you or I or a listener might individually be willing to put our money in China. The big money is going to flow to China. I mean, these big hedge funds are just gnashing their teeth to get into that market because it's what we call an inefficient market. There's no money flowing in there. Mm-hmm. And I mean, that's how John Templeton got knighted. Sir John Templeton discovered foreign markets, and he was going into places like Italy and Spain and all these strange countries, back when it was out of fashion. And it didn't matter whether any individual thinks it's a good idea. That's where the money is going to flow. But people are going to need an alternative to the Chinese currency, and that only choice is gold.
Yeah, so gold and Chinese currency, because they might not be treating Americans too well in spite of everything that's because of everything that's happened over the past few centuries, right?
Yeah, right. I mean, there are a lot of political reasons why individuals might not want. I can understand that. I mean, you and I are children of the Cold War, let's face it, and we remember back, and we're not as trusting of governments, and we've seen what happened in Russia a couple times, but on the other hand, if you read, I get a publication every month, and I think it's Caixin. It's CAIXIN, And they also have a website. It's an English language publication out of China. And it's just amazing to read the difference. Each issue is filled with discussions of regulations being scrapped in China. On the other hand, you pick up the newspaper in the United States, all you read about is our current government imposing regulations.
Yeah.
It's totally different. And in China now, if you want to do business in the Shanghai Free Trade Zone, it used to be in China that if you tried to do business there, they had an approved list of businesses. These are the businesses that foreigners can do. They've scrapped that. And when they went to a list they cannot invest in. And so it's a much shorter list. In other words, the old system, you had to find something that was on the approved list. Now, as long as you don't try to do something on the disapproved list, which is much shorter, you're welcome to do business in China. Well, I mean, try and open a new business in California. I bet you couldn't get it done in 18 months.
Yeah. Oh, that's for sure. They're not exactly what you would call business friendly there in the People's Republic of China. Hey, and when we return, the opening of China, more on that. That's the big story on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
Hey, in case you just joined us, we're talking with Ned Schmidt. You know him well. His website's on the internet dealing with gold and commodities, really legendary. And God, we've been talking to Ned now for years. And Ned, so really, you're thinking that that this is really the big unreported story of the year, maybe the decade, huh?
Oh yeah, I mean this is like Columbus discovering America. You know,
Mm-hmm.
You should have staked out some ground. You know.
Yeah.
And again, as we were talking earlier, it's not whether you feel totally secure in putting your money in China. I can understand a listener not feeling that totally,
Yeah.
but don't ignore where the river's flowing.
Mm-hmm.
I mean, that's where the money's going.
Yeah, we know that. It's just a question of how long it's going to take for the process to occur, and are they going to screw things up? You know, they've done it in the past.
But that's a problem investors face everywhere. I mean, look at the United States. Our Federal Reserve is on the third screw up in 20 years.
Yeah, they're masters.
And China and Europe hasn't done so hot at it either.
Mm-hmm.
And maybe someday we'll start shooting economists.
Yeah, well, hey, Shakespeare always said, first thing we do is kill all the lawyers, right?
Well, that's the old story. With the shipload of lawyers at stake, that's a good start.
Yeah, but maybe he had it wrong. But I guess they didn't have economists in his days, right?
Right. And other matters. You want to talk about ag for a minute?
Yeah, let's talk. What's happening there, because it's pretty much playing out the way you said, isn't it?
It's starting. It looks like we had a bottom in the grains about 4 weeks ago. You know, one of the characteristics of markets for years, it seems like, is they get pushed to extremes. I mean, everything goes to an extreme. If you look at some of these individual things that were called growth stocks, like soda, it gets pushed to an upside that just eventually it's going to collapse. And we had that problem in the grains. The short selling was just rampant, and it was emotional. I mean, it was not reasoned. But now reality's starting to creep in, and while we're going to have a monster harvest of corn and soybeans this year, we're having a little trouble getting it out of the field. This stuff isn't made in the factory. You just don't pull up a truck to the factory and load it up with corn.
Yeah, we know
You got to get it out of yeah. And we're having trouble getting it out of the field. The corn harvest was at 31% done on Monday. Normally it's 53% done by now. And it's starting to be an issue because while the soybean harvest is picking up, there still are shortage of soybeans in the United States. And so reality is coming in that everything's not just going to be dumped on the grain elevators day one. And the world is still short corn and soybeans. The United States happens to be a rare case where we have a surplus. But right now, corn in the United States is selling for about $3.20 a bushel. In China, it's selling for $9.90 a bushel. Now, it has to sell for more because of the transportation cost.
Sure.
But that's how big the shortage is in China. Now, the calendar keeps turning. And right now, the planting has started in Latin America. When we're harvesting, they're planting. And what we're seeing in Argentina is a 10% reduction in corn acreage. And I had been forecasting about a 10% reduction in U.S. corn next year. It's going to be bigger than that. We're going to see the biggest drop in corn production in the United States and globally. It's not caused by bad weather. In other words, this is going to be intentional. Right now, a U.S. farmer planting corn or soybeans is losing money. If he plants soybeans or corn at current prices, their farms will lose money next year. They're just going to cut back. They're going to cut back on fertilizer. But what that means is the old adage that low crop prices create high prices is going to happen again. And so prices of all these commodities next year are going to be higher. In the grains, anything connected to a grain, meat prices, looks like maybe by mid-year, you might be able to afford hamburger again.
For a while. Right? For a while.
Yeah. So this is a sector. I mean, I hear these talking heads on TV, and they'll say, well, it's an ag company, so it's a sale. Well, don't think about what happened yesterday. Think about what's happening tomorrow. I mean, and so if you're adventuresome, I mean, the time to buy Deere and AGCO, the tractor makers, is when they're not selling tractors. You know, in capital goods, you want to buy when things are tough, and they're going to start getting tough for the next 6 months. But by then, the outlook will have improved. So that's when you want to step up and look at something. Syngenta. Syngenta is the alternative to Monsanto. Syngenta, Monsanto's the one everybody loves. Syngenta has a genetically modified corn seed that is not approved for importation into China. Just for background, genetically modified seeds require 2 approvals, one to grow it and one to sell it. And so this corn seed, while it can't be yet imported into China, it will be, but it's not yet, is an important seed in the Western Corn Belt in the United States because they have a problem with corn worms. And this genetically modified corn seed defends against carnworms. Well, anyhow, some of this got mixed in a load. It went to China. The Chinese got hard-nosed and rejected it. And now everybody's suing everybody. Everybody's suing Syngenta, and Syngenta's suing everybody back. And so this has depressed the price of Syngenta, and it will fade. So instead of Monsanto, you should be, now's the time to be looking at Syngenta. Mm-hmm. And another one to keep looking at is JBS, the big Brazilian animal protein company. Remember that 75% of their business is in the United States. They own Pilgrim's Pride and Swift. And so they are benefiting from the Russian embargo of U.S. and European meats because Brazil's not on the embargo list. So they're doing fine business with Russia. They don't talk about it, but they are. Then a couple that you and I have talked before about the animal health sector.
Sure.
These stocks are not going to look cheap again, I don't believe. But Zoetis, which is ZTS, by the way, JBS trades in the United States as JBSAY. In animal health, it's Zoetis, ZTS, and a smaller company, PAHC, and then sometime in the next 6 months, my brain dead, FMC. FMC is going to split. So this is a sector that didn't exist a year ago.
Yeah.
And it's been popular, and I think the street likes drug stocks.
Oh, yeah.
And they don't understand the drugs, but it doesn't matter.
Yeah, well, that's the street. That never stopped them before just because they didn't understand something. Hey, Ned, we got to go now. Hey, just...
All right.
Just tell us your two sites again.
Yes, gold is on valueviewgoldreport.com, and the second one is agrafoodvalueview.com.
All right.
And as always, it's fun to talk to you, Kerry.
Hey, you too, Ed. You can find both of Ned's links in the show notes on the financialsurvivalnetwork.com, financialsurvivalnetwork.com. Sign up for our free newsletter. One's going out real soon. And take a look at the site while you're at it. I think you'll like it. Ned, as always, thanks. Talk to you soon.
All right, bye-bye.
FSN Radio. It's all about what's next.
This show is brought to you by Audible, your leading source for audiobooks and courses. You know that I'm a huge Audible fan. I've got over 300 audiobooks in my library and have been a member for over 6 years. They've got a great deal for you. Join now and get a 30-day free membership and a free book. Go to audiblepodcast.com/FSN. That's audiblepodcast.com/FSN. I just downloaded Lee Child's latest in his Jack Reacher series. I can't wait till my drive to South Carolina to start listening to it. I know you'll love Audible as much as I do. Go to audiblepodcast.com/FSN and get started today.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.